Welcome back to The Dive. Expectations on the March FOMC meeting, oil price action, the possibility of a Fed digital currency, Bitcoin, and tech names are the topics that our guest will deep dive into today. He is the president and chief market strategist of InTheMoneyStocks.com and one of our regulars here at The Dive. Gareth Soloway is joining us today. But before we bring you Garrett's interview, do me one quick favor and go ahead and smash that subscribe button, please. Hey Gareth, nice to see you. Welcome back to the show.
Hey, thanks for having me back. Great to be here.
Okay, so let's start with the upcoming FOMC meeting. Expectations about raising rates are anticipated. Are you expecting a move from the Fed?
Yeah, I definitely am expecting a move. So, if you went back 2 months ago, everyone was pricing in a 50 basis point hike. I think because of Russia invasion of Ukraine, oil price going as high as it did, I think you have to be in line for a 25 basis point hike. In fact, I think Jerome Powell kind of led us to believe that just recently when he was talking, I think, to Congress. So for the most part, expect a move, but it's very choreographed, which means the market may not have a big move from it.
So President Putin signed a decree that will restrict the import and export of Russian Federation's territory products and raw materials until the end of the year. The restrictions and product details, however, are still unclear. What commodities or products are you watching closely here?
Yeah, so for the most part, oil has been the big one, right? We've seen wheat go up crazy. We've seen other commodities as well, but oil has been the one that the media and the stock market has played off of the most. So I think it's important to kind of look at the charts, and to me, it's really gotten way overdone. In fact, I called this top on oil just recently, and I want to show you guys where I got this from because it's really remarkable. So here you can see the WTI chart of crude where it ran up to $130. What I love to do is I love to go to history, right? And if you go to the monthly chart, we had this massive run up in 2008, followed by a big collapse. And what I like to do is I like to use these parallel lines, and you'll see why in a minute. So if you connect this high from 2008 to this high in that we just hit, and you take the parallel line down, look at what you get. So you actually end up getting the exact lows on crude going back since 2008 as well. So what that told me is that this likely 130 level was going to be the top on crude. And sure enough, my members and we did end up shorting more of it there. I was short already, but we really added heavily to the position right there. And so far we've had a big drawdown. In fact, today we got as low as 104 in a big flush. I do expect it to go as low as 100, but certainly, the price action in the commodities is wild right now. It is insane. But it should start to quiet down as the market figures itself out.
Okay, so moving on here. President Joe Biden is signing an executive order on the government to promote research and the possibility of the creation of the Fed's own digital currency. It seems that regulation of cryptocurrency and digital assets has been increasingly a talking point for some time now. How closely are you watching this?
Yeah, to me, it's not a huge deal. It's something that's inevitable, right? The government, let's be honest, a digital currency run by the Federal Reserve or the government is no different in terms of another fiat currency, except it's all digitalized. Now, that basically means that the government will be able to track every single thing you purchase or send money to or anything like that. So it's more of a tracking measure for me. It's not so much anything like a Bitcoin. The beauty of Bitcoin is that there's only going to ever be 21 million mined. And so there's a limited run. With a digital dollar, they can still print $1 trillion by the click of a button. So there's not much difference there. But I think it's important for everyone to understand that the idea of a digital currency is to make transferring money easier, but it's also to make sure that everyone is paying their taxes and that we know, or at least the government knows, where the money's going.
Interesting. Okay, so let's go back to Bitcoin here. In one of your most recent interviews, you mentioned that you see the price of Bitcoin at $20,000 or lower. Could you give us some color on this?
Yeah, absolutely. So this is still the outlook, even though I'm a swing trader and I'll play the ups and the downs of Bitcoin. Couple reasons for that. Number one, here's the chart of Bitcoin, and we can see that you're now starting to create what's called a megaphone pattern. A megaphone pattern occurs when you have a big move down, and then you have two lines that are diverging, right? So basically, this line is sloping up, this line is sloping up less, and it's kind of making this choppy up and down price action, right? And we're seeing this more and more. And this pattern, the probabilities, if you look at 1,000 times that this pattern happened or 10,000 times in history, it usually breaks lower. About 70% of the time, there's a move to the downside. So just keep that in mind, that that's a bearish indicator for the midterm. The other factors are, for me, is that the Fed is going to have to continue to tighten, right? Oil is higher than it was even recently. Inflation is going to continue to be a problem. The Fed is going to have to tighten. When the Fed tightens, it becomes a risk-off environment. We've seen tech stocks fall. Bitcoin has already fallen. If the Fed is going to continue to tighten, then Bitcoin is going to be going lower. Now, lower by how much? Historically, in bear markets, Bitcoin has dropped as much as 80 to 85%, right? 2017 high to the lows, 2013 to the lows. So the metrics kind of dictate that I would honestly be very surprised if we don't go below 20,000 in this next phase. Now, in the longer term, what you're seeing geopolitically is very bullish for Bitcoin. There's lots of bullish signals that over the long term will play out. But the tightening phase is going to suck a lot of liquidity out of stocks as well as crypto. And that means more downside longer or midterm.
Now, we saw in one of your tweets recently that some tech names are starting to show some green. Mm-hmm. What charts are you watching right now?
Yeah, so recently I was really liking beaten down names, and my strategy is to play names that have been beaten down. Then they saw a bounce on good earnings, and then because of the market sell-off due to the Russia invasion, we were then seeing them pull back. So one of the good examples here was Square. And Square, again, already down from basically $300 a share back in 2021. And here was your low. And then it announced earnings and then basically went up 20 to 25% in the next couple of days. Due to the market's decline, it brought the stock back in, essentially filling this gap. And that's what you want to look for. So essentially what you're doing is you're looking for quality names that are being taken down, not because the stock or the company is reporting anything negative, but because the market is pushing it lower. And those are the types of stocks that are bouncing. And you can see today it's up 11%. I mean, remarkable move there. Another one I like is TDOC, Teladoc. Here you had the same kind of thing. It hit support, it rallied, it gapped up on earnings, and then it has fallen back down because of that. Those would be names that I would be focusing on in the near term. Again, these aren't long-term investments yet for me. They're more swing trades. So outlook is, a few weeks to a month or so, but certainly those are the types of names that I like.
Mm-hmm. Are there any other trades that you'd care to share with us?
Yeah, I mean, just thinking about it in general, again, I think you look for things, and again, with bounces in the market today, and I'm not sure how things will go over the next couple of days, but you have to be careful. You don't want to pay up because I still think we're in a bear market. But ultimately, I would focus on shorting some of the energy names that have gotten way out of control, the Chevrons of the world and so forth, thinking eventually we're going to get a deal with probably Iran to allow more oil. Iraq is probably going to come in. I heard OPEC is likely going to increase production. We just heard that Venezuela released 2 Americans, which tells you that the U.S. is negotiating with Venezuela, which is all about oil as well. So I think oil, again, goes sub $100. So you look to fade energy stocks right now, and then look for kind of the risk on trade to be back on for the next week or two, whereas technology stocks are probably the place to be.
Okay, great. Thank you so much for joining us today. Before you go, would you let our viewers know where they can find more of your commentary?
Yeah, absolutely. Thank you. Twitter is the best place at Gareth Soloway. So at my first name, last name. And then we also have, or I have a website, verifiedinvestingcrypto.com, which is just cryptocurrency trades and daily videos with technical analysis. And then inthemoneystocks.com is for just stocks. Same thing, trade alerts plus videos. So thank you so much for having me. It's always a pleasure.
Yeah, thank you. We'll see you next time, Gareth. Bye. Thanks so much for watching today. We'll be back again tomorrow and you won't want to miss it. So be sure to stay tuned by hitting that notification bell.